Again, welcome everyone to Mentor Mondays. This week we have Faisal Kawar that will be presenting to you his expertise and his experience in the fintech space. Today we are coming to you from the Space Pod, which is the new digital studio of Fintech Hive, located on the bottom floor. The space is a fully equipped digital studio that can be used by all our ecosystem partners. So if you'd like to rent the space, then please do reach out to any of the team of the Fintech Hive. So a little bit about Faisal before I hand it over to him. Faisal is currently a global early stage investor with Fintech Collective, which is a New York based venture capital firm with 50 portfolio companies. He's super passionate about mentoring and investing in Mena fintech startups and is an active angel investor. Faisal has an MBA from Harvard Business School, and he founded the HBS FinTech Club, and he has a bachelor's in engineering from Yale University. He is also a mentor at Yale City and Oasis 500. Faisal, welcome. Thank you so much for joining us for this week's Mentor Mondays. We are so happy to have you here, and please, by all means, take it forward.
Thank you so much, Yasmin, and thank you to DIFC for having me. I'd like to take this opportunity to really just let the audience know that this is your time, and I'd like to keep it as a dialogue to the extent that we can. I'm calling in from New York City, where it's really early on a Monday in the middle of a hurricane, but I did spend a couple of weeks in the region earlier this month, and I can proudly say that fintech is truly at an inflection point. And I do look forward to being a part of it, despite me being in New York at the moment. If you don't mind, I'd love to spend a couple of minutes walking you through my journey to fintech and venture capital, sort of what I'm most excited about in Mena, and then would love to share some advice with some of our founders here and the DIFC FinTech Hive ecosystem. I grew up in Jordan. That's where my family's from. I went to the first co-ed boarding school there. And when I went off to university, my first experience with financial services was obtaining a credit card. And in the US, the concept of a credit score was new to me. The fact that I had to get a debt facility in order to get more debt facilities was a new concept. I had a $200 card, didn't know how to repay it. My credit score plummeted. I wasn't able to get a credit card for a long time. And that was really the first experience with financial services and fintech that I've ever had. And when I decided, what I wanted to do from university, I tried an engineering internship in California. I tried a journalism stint in Washington, DC. I was even part of a sales team selling financial software with Bloomberg in London until I did my last internship in venture capital, that I realized I wanted to be part of the startup world post-university. At that moment, I graduated and moved to Dubai. I actually lived at the DIFC. I really enjoyed my time there, and really that's where my world of financial services really opened. I was really lucky to work on several transactions. One was with Network International, which at the time I worked on the sale to General Atlantic and Warburg Pincus. It's currently listed on the London Stock Exchange. And really, this was in 2014 and a really foundational part in the Mena ecosystem. At the time, worked closely on the big basket transaction in India, Kareem, when Abraj led the Series B. It was really, the post-Maktub Yahoo acquisition world where we were looking for winners. And I was lucky to be a part of some of those. And while I was there, I wanted to go to business school in order to start my fintech startup. And in the year between being in Dubai and going to business school, I joined a startup out of Jordan called IrisGuard. It's crazy to think that this is a business that was built in our region that was doing iris recognition for assistance in payments across MENA and the emerging markets, where you can identify one person out of tens of millions of people within seconds, and being able to disperse cash and assistance efficiently. I helped them, I was in New York at the time, helped them raise capital from Goldman Sachs and IFC. I'm really proud of that homegrown tech and being a part of that journey. And while at business school, I did start my fintech startup. And while I was doing that, I got recruited to go back into venture, but focused on fintech. And today, I'm at Fintech Collective. We're a team of 6. We're based in New York, but we do invest globally. We have no limitations on our geographic mandate. With that said, we just announced that we have 250 million in fresh capital, 200 million of which is for our early stage global strategy, and 50 million for our new digital asset strategy focused on decentralized finance. And we're in the business of reimagining how the money moves through the world. So we invest across capital markets, wealth and asset management, banking, lending, payments, and insurance. We sort of think of 3 meta themes when we're thinking about financial technology and services in the next decade. Sort of the continued shift to digital, the rise of this next billion consumers in growth markets, and then lastly is the emergence of digital, composable, open source ecosystems. With that said, I'd love to give you guys a little bit of a glimpse into why I think MENA particularly is one of the most exciting regions for financial technology globally. The first is there are 300 million plus people in the region. Most of the people in the region speak 2 languages. Unfortunately, some of the markets are disjointed from each other, but with that said, it is so tremendously well located close to Africa, Europe, and Asia that we are absorbing a lot of the new talent and a lot of the new learnings from those markets. There are 3 sort of key themes that I'd like to focus on. The first is the emergence of VC and sort of local VC. The second is early evidence of venture returns, which is for people in the business of venture capital, a foundational part of why we deploy capital. And then the third is finally what I think is both recycling talent and supportive regulation. When we look at the first bucket with emerging VC, you have local players who are on sort of the 2nd or 3rd generation funds, and in some instances even longer. That's really important when you're thinking about developing an ecosystem. You want to have local players who understand local dynamics, who understand local talent. And when I'm sat in New York, I'd love to always partner with local funds rather than compete with them. The second on venture returns, Swivel announcing their SPAC, Kitopi raising at $1 billion valuation, and going back in time to Kareem, Souk, Talabat, Maktoob, even Fawri. These are all really foundational data points when trying to attract venture capital dollars into the region. And finally, being able to deploy capital where historically exits were not necessarily what MENA was known for, but definitely very foundational for the future of venture capital in the region. And then lastly, with those exits, you have the opportunity to recycle capital. Kareem alone is responsible for 80 plus startups in the region. So no doubt you have sort of the Kareem mafia akin to the PayPal mafia in the US, where you have founders who've done it before and want to build their own, go at it. And that's super important when you're trying to unlock the next generation of startups. And obviously we're at the DIFC FinTech Hive, and that's where I think regulation and having these regulatory environments especially for financial services with sandboxes and licenses that will be foundational for the future of FinTech. And I do think this is a moment in time where you're at the confluence of these 3 things, capital, talent, and regulation, that I'm excited to dive in and support the MENA ecosystem as much as I can. With all that said, I'd love to just set 3 key themes for advice that I give to every portfolio company that comes through the door. We have 53 today, but I meet with thousands of founders around the world. Sort of 3 key themes when you're looking at startup advice. The first is on talent and sort of hiring. The most important thing for a founder, in my opinion, is to be able to surround yourself with the best talent you possibly can. For a VC, this is early evidence of sales abilities and the ability to attract the smartest people. But most importantly, it's transformative for your business. And most of my founders end up hiring 50% of the time. And that's a really arduous task, but it's the most important one. The second is cash is king, and I think we can all agree with that. But it's important to think about cash in three lights. The first is venture capital money. This is equity financing. The second is debt financing. And then the third is revenue is also a form of financing, and if not the cheapest one. So I think, what I tell my founders is always assume the worst and assume zero revenue when you're trying to forecast, and always try to have enough cash through a lot of uncertainty. And I will repeat this again, cash is king. And then lastly, the best performing founders in my experience are the ones that are the best communicators. They regularly share updates with their investors, with their stakeholders, with their team, and the ability to really simplify the message, but share that message will allow you to surprisingly have people around you that want to help. And I do highly suggest that every founder try to do that to the extent possible. It really is sort of the key metric when I'm thinking about what I would recommend my founders to do. So I think that's a good sort of opening, and I would love to continue to keep this a dialogue and answer any specific questions as well.
All right, thank you, Faisal, for giving us a short little question break. Okay, we have a couple of questions now. One question is, hi Faisal, what do you think of the fintech entrepreneurship scene in Amman today?
Great question, and I'm glad we talk about Amman. Amman was really one of the first ecosystems in the region to step up and try to set up some of these foundational players. Oasis 500 is definitely one that I'm involved with and do think set the stage for what an accelerator program should be, what a venture firm may look like in the region. I do think they did bite the bullet in being too early, perhaps. They did take the risk I think they were started in 2013, which was a long ways before where we are today when it comes to the Mena ecosystem. With that said, Jordan is small relative to its surrounding markets, but it has always been a source of talent for regional players. Souq.com and now Amazon famously use it as sort of their support office and back office. Other startups do end up founding there and moving to Dubai or Saudi Arabia. And so I'm tremendously excited by the Amman ecosystem and think the talent there will continue to be useful to the region. Yasmin, I think you're on mute.
Thank you. Okay, we have another semi-question, I think more of a commenting on your end, Faisal. George is saying, need a brief on cryptocurrency and blockchain. So maybe offer your opinion on the two techs.
So I think from my seat, most appropriate would be to probably comment on decentralized finance. Today when we're thinking about the evolution of financial services, I think there were sort of three clear steps that happened in the evolution. The first is you had really old legacy technology that just had a new face or a new user interface. And this was sort of FinTech 1.0, where in the background, it's still very manual and very, very opaque. The second generation of financial technology was the digitization of the technology stack, where you were able to actually build net new capabilities and services, but therefore products and experiences for financial technology. The third is, and this is the evolution of decentralized finance, that you no longer require certain institutions to facilitate transactions, but rather all you need is a smart composable open source smart contract, and apologies for all the jargon, layer that allows you to really bridge a lot of these transactions with no central authority. So a few examples in decentralized finance is the Ethereum ecosystem, the ability for people to either borrow money or lend money without a bank to interact with is a tremendously powerful tool. The ability to actually store value in either a piece of art on an NFT or a real estate contract is the ability to not actually have a counterparty that's sitting in a financial institution. And I think that's tremendously powerful when you think about the future of finance. Today, what is the DIFC in the metaphorical sense? It's on paper, it's a regulated entity that brings people together to solve and build financial services and products. And I do think the future of the DIFC could be decentralized within the ecosystem and players in the region. So I think the future is absolutely bright for decentralized finance. And I do think Mena can play a powerful role in its usability, but also in the future of finance.
Great. That was a great answer. Okay. Yeah. So Fadi is asking, can you share your contact details? So to all of you guys that have attended, Faisal will be sharing his contact details at the end of the session. Once again, guys, please leave your questions in the Q&A box for me to ask Faisal. And if you'd like to ask him a question directly, please use the raise your hand feature. We do have another one. Oh, this one's juicy. Hello, Faisal. The market that my venture is targeting is $15 trillion. Since it is a B2B approach, I can't develop my startup gradually. In other words, the first dollar revenue will cause that we won't need any VC anymore, but the usual VCs seem to invest only post-revenue. What is your advice how to tackle this issue?
It's a great question. I think there is a misconception in the market that once you have revenue that you might not need support from venture capital or growth investors. The reality is that the marketplace is very competitive, and there are several ways that you can gain an advantage on your peers. The first is to build a superior product. The second is to raise more, whether venture capital money or growth equity, to be able to actually facilitate your entry to market. And then the third is the ability to hire the best people around you. And with those three things that can differentiate you, if you have a similar product to your peers and the same venture capital or equity, then it's all about the people. With that said, I do think there is a problem in our region where there is a gap between sort of Series A venture capital dollars and then the pre-seed founding dollars. With that said, there's nothing wrong in really being able to raise small amounts of capital to at least get yourself to a minimum viable product or to get into market. But the one advice, and this is the advice that, for lack of a better person to quote, but Steve Jobs, he said his only job is to iterate as fast as possible as the founder of Apple. And I think that is true for any startup in any industry. If you think you've built the best product for your market, then absolutely you've made it from the first shot, but that's tremendously unlikely. And the more shots you have on target, the better likely your success, the outcome will be. And so I recommend everyone to definitely try to raise some risk capital early in order for you to iterate as much as possible in order to really solve the problem. Don't be wed to your solution. Really just focus on the problem and what you're trying to solve. And the best metric to know you've solved the problem is a customer paying you. So that's why I always recommend that revenue is always a clear indicator of early product market fit, but B, the cheapest source of equity financing as well. So that would be my recommendation.
Great. I think Andreas enjoyed that answer very much. Okay, guys, do we have any other questions before Faisal continues to go on with some of his experience? Once again, you can use the Q&A box to send across your questions, or use the raise your hand feature if you want to ask Faisal a question directly. Okay, Faisal, if you want to continue with the points that you want to make, that would be great. And then as they come in, I will politely interrupt you for more questions.
Perfect.
Okay, great.
I'd love to spend some time thinking through at least how we break up the world of financial technology. Today, or historically, fintech was viewed as a new sector or a new vertical built on top of financial services. And clearly, the future of financial technology is actually it becoming a horizontal layer, essentially an enabler of absolutely every sector. Every business needs to accept payment, whether that's a form of cash, check, or digital payment. The second is every business requires a form of lending facility or debt facility. Or every business has working capital. Every business has a cash conversion cycle. The third is every business needs to pay suppliers. So again, back to payments. The fourth is every business needs to pay its employees and sort of payroll management. And so the fact that every business may require or be a user of financial technology and services renders this horizontal layer more an enabler. And today, at least in the markets that I operate in, which is the US and Europe, we're seeing a lot of embedded financial services and an embedded products. So today, if you wanted to buy a car, you would go to a dealer, they would fill in the paperwork for you to be able to get a loan. That might take a week for a decision, maybe 2 weeks. By that time, you're no longer interested in that car or that dealer, that you might walk away, or you might shop. You might shop for a better price. And today with embedded finance, you could have point of sale credit decisions and the ability to make lending decisions, that the future of fintech is coming to the source of the transaction or the source of the risk. And that's really foundational. And I do think, that's what gets me the most excited about fintech, is that it's no longer a standalone product. It's really embedded into the way we do commerce, and the way we interact with people, in the way that businesses interact with each other, in the way that businesses might interact with their customers. And then lastly, it could change how we interact with governments. Today, it's really difficult for users in our region to have access to pension plans, to have access to lending facilities or advanced wage access. And these sort of small foundational changes will be tremendously powerful when you think about embedded finance. I'm really excited, and we call that two things. The first is it's an infrastructure layer, but it's also a data layer. And today, that's where I think the MENA ecosystem will definitely require the first building blocks of fintech is around data and around infrastructure. And so that's what I'm tremendously excited to see getting built in the region, and hopefully get to see that at Mena FinTech Hive. And that's one area of tremendous focus for me. The second is I'd love to understand sort of Mena's role in facilitating talent and really new technology from South Asia, from North Africa, from Eastern Europe and Turkey, and thinking about where is this aggregation of really exciting things. And I'm curious if founders from DIFC FinTech are focused on MENA or focused beyond MENA into East Africa, into potentially Central East Asia, into all of these adjacent markets that could be just the launching pad for some of these startups. And then lastly, and this is mainly from my experience in Dubai, I'm tremendously excited by real estate technology and prop tech. I did mention earlier the beautiful thing about decentralized finance is the fact that you can actually break down what was a singular contract into much more smaller contracts. And we like to call some of that sharding. The ability for a single investor to own 1% of a real estate asset was, or 1% of an apartment was unheard of before. And Dubai, having been a real estate city and real estate, and the UAE a real estate country, I'd love to see that part of the world become sort of the epicenter for prop tech. It's one of the largest asset classes in the world. When you look at commercial, single-family residential, multi-family residential, industrials, it's really a blue ocean when you think about applying technology to a very opaque and an industry as old as time. So I'd be excited to meet founders in that space as well, and looking forward to seeing people build and ship product in that space. Yasmin, I'm happy to answer any of potentially your questions if you had any as well.
So I'm just checking quickly the chat and Q&A box. We don't have any new questions. Come on, guys, I encourage you to ask.
That means I'm answering before the questions are even asked.
Yeah, I think so. I think you're just that proactive with all of the major themes, especially when it comes to the DIFC and what's happening here, especially when it comes to Dubai and prop tech. Oh, we have one question that just popped in. Oh, okay. Do you see yourself living in Amman?
This is a really good question and foundational. I think I, like many of the Arab diaspora, do want to move back. I think being close to family is tremendously important to me, and I'm sure to many others. But truly, what I'm seeing now is, especially with the remote first world, the ability to live in many places, particularly spending a lot of time in the MENA region, is something I will absolutely do. I think you can only be abroad for so long, at least when your passion is financial services and technology and access. I definitely think I'll at some point in my life live in Amman, spend time in Dubai and Cairo, potentially between London and New York as well. But I absolutely will live in Amman at some point.
Okay, great. So we have a few more coming in now. Okay, so hi Faisal, for fintech collectives investments, do you invest in non-Delaware hold cause, or is that a requirement from your side?
That's a good question. I think as a U.S. venture capital firm, we from experience have mainly invested in Delaware C Corps. It's the easiest from a legal standpoint for us to fund. One example, and many examples that operate in Latin America or Africa, are Delaware C Corps. I think the issue becomes just thinking about the tax implication for a founder in Mena to be a Delaware C Corp. I've seen alternatives as a Dutch entity. I've seen alternatives as a Belgian entity as well. I've seen, obviously, Dubai, DIFC domiciled startups as well. I think every US investor will have a perspective, but I will say from our perspective, Delaware C Corp has been most of the standard. For Europeans, it might be a little different.
Okay, so we have a question from Sumit. How can fintech scale in the region given the fragmented regulatory landscape across MENA? Do you see a fintech unicorn in the next 2 to 3 years?
I think that's a really important question. Today, MENA is 26 plus countries, all with disparate and siloed regulatory regimes, particularly in financial technology. And the ability to have a single company operating across every market is not going to happen, at least not going to happen in short order. If we take another region that actually, on the surface, there are similarities to MENA, is LATAM. In Latin America, you also have a single language outside of Brazil, it's Spanish. You do have around the same amount of people, 300 million plus. You do have the emerging middle class, the emerging consumer, and you do have siloed regulatory environments across most of those markets. And so if we take that as a region that has done it before us, what are the unicorns out of LATAM that we can potentially replicate in MENA? Nubank currently operates mainly in Brazil. They have moved to Mexico recently, but it is nowhere near the bigger part of their business. So it's a single country unicorn. I think Brazil can actually host many unicorns as a single market, given its breadth. But you are starting to see countries that operate, amongst Chile, Mexico, Colombia, Peru, where you can really build a unicorn across 4 or 5 markets. And when you think about MENA, you could have a unicorn that operates across the UAE, Saudi, Egypt, solely with those markets. There was a business that is built in Kazakhstan. It's a super app for financial technology. It's currently worth $18 billion, and Kazakhstan's population is 18 million. So I think you can have these single market winners, particularly if you think about building as many horizontal products as possible and not focusing on one product particularly. But I do think and hope that the MENA region does build a more cohesive regulatory framework to allow these businesses to operate cross-border as well.
Okay. So another question, what are the latest fintech trends that MENA has to think about implementing? Sorry.
I think MENA should focus on the foundations of financial technology. I think MENA needs to have a digital identity layer. I think the ability for you as an individual or as a business to identify yourself in an online world or a digital transaction is tremendously foundational. And I do think some environments are starting to allow for that to happen. The same way Plaid did it in the US or open banking did it in Europe, this will be a foundational piece to allowing financial technology to prosper. The second is thinking about, in my opinion, the payment infrastructure. Today, in the US, 50% business transactions are check. I can guarantee you in MENA, it's a much larger percentage. I think the ability to move beyond that into digital payment will be critical. Because you have more data, therefore you can underwrite and understand payment behavior better, which means people will then have more and more access to funding or potentially to other products. And that ecosystem will continue to the flywheel and going. And today, one of the biggest problems in business environments in MENA is businesses are cash strapped all the time because no one pays on time. Therefore, you don't pay on time, and you end up in this credit crunch that affects everyone in the market. And so the faster we move to having your digital identity online, the faster you're able to switch to digital payments, the more likely you are to unlock all of this value and cash that is stuck in our businesses today. So that's where I see MENA trends going.
Okay. A lot of questions are coming in, so we're going to try to get to as many as we can, guys. So another question is, what do you recommend to entrepreneurs thinking about creating products within the financial industry space, about starting companies that require big investments in infrastructure and planning before revenue? And he gives an example, or she gives an example of online bank or regulated financial service.
I think this is where MENA is a few years behind other markets. If you go back 5 to 7 years in the US, yes, businesses had to have the capital requirements and the licenses and the heavy equity investments to be able to build a regulated financial institution, or at least one that sits on top of the banking environment. But today, it's easier than ever to build a financial product in the US and Europe because you finally built banking as a service or license as a service that allows you as a product or a startup to not build the entire regulatory framework yourself. And I think this is the most similar metaphor to this is AWS. Today, as a startup, you don't have to have your own servers in the back, in the garage to be able to stand up a website. You have Amazon that's giving you that service that you can build and grow with and scale with. And now you have the same similar service for banking and payments and lending that allow you to do that without all of the overhead that's required for you to do that. And I think Mena will definitely be in a position to do that soon. We still don't have the infrastructure layer to do that, but once we will, you'll be able to do that. With that said, I think your question was what to do in this scenario. I think it's important to figure out if you do have a product that is solving a problem, and that's the number one determinant if you should raise capital to invest in sort of building your regulatory and licenses. So I think start with the customer, start with the problem. If it is working, then you can justify an investment versus the other way around.
Okay, so we have a tech question. How will the introduction of 5G impact fintech in terms of risk?
That's a really good question. When I think about 5G and the future implications on fintech, the first sort of thing that comes to mind is how IoT will impact fintech, or how fintech will impact IoT. Today, there's too much latency in 4G networks to allow for you to insure a car that is driving, at 100 kilometers per hour. But with 5G, you can start building these low frequency networks across IoT and machine-to-machine payments. That 5G finally unlocks a whole new world, especially with that said. So I think the future on insurance is going to be big. I think the future of micro payments is going to be big. I think the ability to actually generate new data points for lenders will be big. So today in Africa, for example, a lot of these telecom networks are using data points on the mobile phone to be able to justify if someone is creditworthy or not. And I think 5G will even take that a notch higher. So I think 5G is a super exciting technology that will be tremendously valuable to fintech.
Okay, so we have most VCs avoid signing NDAs. What is your experience or opinion regarding this issue, bearing in mind that financial services in general are intangible? You hardly will get a patent on them. In other words, how is your company protecting the IP of fintech founders?
So I think this is a really foundational question. I think VCs in our role today, it's really difficult to sign an NDA, especially as an early stage investor. I think when a company is first getting started, signing an NDA is only adding friction to a conversation. When it comes to growth investing or private equity investing, I think an NDA, should you have very differentiated data or technology, will definitely be valuable. With that said, I think founders are subjected to sort of a one-way street when it comes to data sharing. I do agree. It's up to the founder to really be liable for the data that they're going to share, but be crafting the story that they want to share to VCs. You don't have to include all of your proprietary data or technology when you're presenting to a VC, but as they do more work, then you could absolutely think about how to protect your IP. But in the initial conversations, all it does is add friction. So I do suggest maybe having a lighter deck or story that will at least allow you to validate if this is something a VC would be interested in.
Okay, we have another question. When can we see a digital bank, do you think, in the region?
I think my banking friends will tell me we already do, and we already have many. And then my telecom friends will tell me that we have many too. I think today, the way consumers interact with financial products in our region is definitely through traditional banks and through telecoms. I think building a net new neobank in the region would be tremendous, just to be able to actually completely rebuild how banks are built, facilitate payments, how your checkings account and how you interact with it. But today, banks have the largest balance sheets and telecoms have the consumers. So I think a neobank uh, hopefully would be able to build on top of those or next to those. I haven't met a neobank yet that will probably take over the region, but there's plenty being built. I think there's at least 10.
So, as banks wake up to fintechs, how do you see them engaging with smaller fintechs? Or maybe what should your opinion be about how they engage with fintechs?
So I do have many friends running these programs at banks to facilitate the interaction between banks and financial technologies. Arab Bank does that out of Jordan. Ahli Bank does that out of Jordan. Obviously, DIFC FinTech Hive is also a place to collaborate and build sort of proof of concepts between banks and financial technology companies. With that said, I do think smaller fintech startups are acquisition targets rather than competitive threats to banks. Uh, a famous professor from HBS who passed recently, Clay Christensen, always quotes the innovator's dilemma when it comes to big banks innovating internally. And I do think that still holds, particularly when it comes to smaller players. You're probably going to be acqui-hired before they build it themselves if they're thinking strategically. So I do think having these environments where it's a sandbox or an early proof of concept is going to push the relationship to at least be fruitful for both.
Okay, I know you covered this a little bit, but there is a rating question, and it says, how do you rate the regulatory framework for fintech in the MENA region versus other jurisdictions? Where would you say we are on the scale or spectrum?
Uh, in the hope that I don't get quoted on this necessarily, I do think the regulatory regime in Europe is strong, especially pushing open banking. So I'd put them as number one. You have the same in some markets like Singapore that are pushing open banking as well. India is pushing sort of top-down led payments infrastructure like UPI or identity like Aadhaar, which I think is foundational for the building blocks of fintech. I'd say the US is definitely pro fintech, at least today. We should see what happens with some of their decisions on DeFi in the near future. But for now, they've been supportive or have had people supporting it. I'd rank MENA after those markets, maybe in line with what's happening in Latin America and some markets in Africa. And I do hope that the regulatory environment in MENA continues to be proactive, with the UAE and Bahrain pushing some of these new regulations. I think it will be really important.
Okay. So we have another comment slash question, and I'm going to kind of elaborate on this one. It says, what comments can you give on the DIFC and what they've done so far in achieving their vision? And I'm going to add to that question by saying, since you're in New York and you're in one of the biggest fintech industry hubs, I would say, what is their perception of the region in terms of where we place and the efforts that the UAE and the region at large are doing?
Yeah. I think the overall view is positive towards MENA and towards DIFC in Dubai. I think Gary Vee, who's a very outspoken entrepreneur, yesterday said that Dubai is known for execution, and DIFC is a great example of that. I do think DIFC and the region really will play a foundational role in at least having other markets and regulators follow suit. And I think that's going to be super important. When you think about New York and the rest of the US, New York is the capital of financial services, and therefore a lot of the local and state authorities look up to New York, at least when it comes to regulation. The same can be said in Southeast Asia with Singapore, London with Europe. It's a very, I do think each sort of geography or micro geography has one of those. And I think the DIFC and Bahrain and ADGM are the three sort of standout regulatory bodies in our part of the world.
Mm-hmm. I think we've about covered all of the questions and topics. I do have some requests from certain individuals asking that if they'd like to reach out to you in terms of offering, a more one-on-one mentorship conversation, if you would be up to that. So I will leave that at your discretion, of course. But guys, if we have any other questions or maybe ones that I've missed, we do have Faisal for another, I would say, 9 minutes. So please do send your questions across.
I will say, I do write a weekly newsletter, which I recommend you all sign up to. It covers many topics. It covers all the financings and interesting industry news of the week. We do write about Mena quite often, and perhaps this week we might write about Mena and Mena FinTech. And then with that said, I'm always chatting on Twitter about what's top of mind in fintech, and I'm always open to open discourse, and I think it does push a lot of the conversation forward.
For sure. All right, guys, do we have any other questions coming in? The questions have been great, everyone, by the way. Faisal, your answers have also been great, but it's really such a meaningful conversation so far.
I've really enjoyed it, and I do hope to be able to do this in person. Would love to swing by the FinTech Hive and say hello to some of the founders.
Yes, please, guys. If any of you have not done so, please do come visit us at the FinTech Hive and in the Innovation Hub in general, and to check out the new Space Pod, the digital studio, so you can promote your products and services and see how we can help in supporting you. We have another. Oh, so would you be willing? Oh, there we go. Never mind. The newsletter link. Okay, good job. Anything else, guys? I'm just seeing if I missed any also. Okay, so we have someone that raised their hand. And I will just allow the person to talk. Okay, here we have a question from Mahdi. Hi, Mahdi.
Hello. Thank you very much for the time. I appreciate that. Hello, Faisal.
Hi, Mahdi.
Thank you very much. Faisal, I have two quick questions. First of all, I would like to know about the role of the credit insurance companies in the fintech. So far, when we look into the fintechs in general, we have some major stakeholders, which are always a bank, a processing company, and then we have a platform. For emerging market specifically, as you know, the cost of capital is very expensive. And I'm coming from a banking and insurance background. I just want to know whether you agree with me or not. When it comes to the cost of capital offered to the customers, it can be in the form of credit card or any form of payment. In principle, the cost of capital is very expensive in the region specifically. But there are a lot of appetite from credit insurance companies in Europe and US, especially those which are overfunded, who would like to deploy their exposure to the region, not specifically capital, but they are willing to take the risk from the region. I always think that there is a very big gap in this sector. And I just wanted to know whether you agree with me or if you have been involved in similar sort of discussions before. And my second question is that how we can be in touch with you and potentially whether you have, because you have great deal of experience, I would like to know whether I can have the opportunity to meet you in person as well. Thank you very much.
Thanks for the questions, Mahdi. I think your point on credit insurance is foundational, and your point on credit capital, on cost of capital, is really, really important when we're thinking about the future of lending and insurance in the region. I think when you're thinking about cost of capital, how do we bring this down for the region? A lot of times it's about having multiple market exposure. Sometimes it's about multiple product exposure. And then lastly, it's about where you're sourcing your capital from. So I think when we're thinking about the future here, it's all about diversifying some of that risk to at least lower that cost of capital. I do think there will be inflow into the region as when you think about a portfolio perspective, definitely MENA should be on many people's radars, especially as China gets less and less of that inflow, given some of the recent privatizations that happened there. With that said, I have met several businesses that are trying to build this credit insurance layer. Really, it's an interesting wedge into trade finance, and I'd love to hear about what you're building, Mahdi. Feel free to reach out to Yasmin, and she can give you guys my contact details.
Thank you very much. I really appreciate your inputs.
Thank you, Mahdi, for raising your hand and asking a question. I do encourage you guys to do the same. It's always great when the mentors get to speak directly to the participants. So do feel free. We have Faisal for another 4 minutes. Okay, well, if we have no more questions coming in, then we'll wrap it up in the next minute or so. In the meantime, as we wait, Faisal, thank you so much for coming on and really giving so much insight to everyone that attended today. This has been one of our highest turnouts in the recent Mentor Mondays. So it has been a great, great session. And I look forward to also you visiting the FinTech Hive and, having the opportunity to meet some of the audience members, let's call them today. I will provide you guys with Faisal's contact information and any other information he'd like me to pass along, especially when we do post his YouTube video for the session. And do please reach out to admin@fintechhive.ae if you have any other inquiries. Never mind. So thank you so much, Faisal. We will be ending the session, everyone, today. And if there are any other questions, just send them our way. Please stay tuned for our next Mentor Monday, which will be in a couple of weeks' time. And have a great rest of your week. Thanks, everyone.